What's going on today, family? In a surprise twist of events, this week, the Federal Reserve has refrained from raising interest rates, a decision that they hadn't previously taken in the last 10 meetings.
High five! All right!
Now, in this video, we're going to talk about what implications that holds for home buyers and what educated predictions we can make about the future trajectory of interest rates and property values. So come with me and let's get into it. Real quick, on this channel, we talk about real estate, personal finance, and Charlotte. If you like any one of those things, go ahead and hit that subscribe button and tap on that bell icon, and do me a huge favor. Hit that like button, as it will propel YouTube to push this content out to more people. I appreciate you. Now, the Federal Reserve has been facing a tidal wave of inflation. Remember, just last July, August, inflation was at 9%.
Wow.
And they're facing this tidal wave of inflation mainly because of their own actions. Now, not only because of their own actions, there was a pandemic, so I have to give them some pass, but they kept rates extremely low for an extremely long time. And they said initially that inflation was going to be transitory, and it has not been transitory, unless their definition of transitory is over a year. And starting back in March of 2022, the Federal Reserve embarked on the path of increasing interest rates, first starting off with an incremental 25 basis points, and that happened a few times, and they escalated to 50 basis points, and ultimately, one of their meetings, they raised it up 75 basis points. That is the federal funds rate, by 75 basis points. And then they came back down to lower it to 25 basis points in February and March, and in May. But just this past week, they said they were going to pause. They were not going to increase the federal funds rate. And you may be wondering, what is the impetus for this pause? Well, the true answer is that they won't admit to you, is that they saw things beginning to break in our economy. So they had to stop raising interest rates because things were breaking, as we've seen with bank failures. But inflationary numbers have come down dramatically as well. Remember, last year we were at 9%, and right now we're at right around 4%. Now, 4% from 9% is a huge improvement, but it is not the goal in which the Fed even laid out for itself, which is they want inflation down to 2%. So we have a little ways to go, but I believe we're trending the right way without them giving any more increases in the short term. Now, I don't see them cutting rates at all, but I do see them pausing for the foreseeable future until we can get a real gauge on what the economy is actually doing and how much stuff is actually breaking under the pressure of our economy right now. What I do believe is that we will have a prolonged period of higher interest rates. I do believe we'll be higher for longer. So those of you anticipating or hoping for a rate cut, based on the data, not just my own personal feelings, based on the data, I don't see any cuts happening in the near future, at least not until December or January of 2024 or December of 2023. So how does this impact you, the home buyer? Well, that means there will be more stability in the market. Now, with the stability of banks realizing or knowing that the Fed is not going to raise rates and there's going to be a pause, they're able to have assurance in what's happening in the market, and they can start compressing that difference. So as the spread continues to tighten or decrease, that means mortgage interest rates will come down. So as mortgage interest rates come down, homes will quote unquote be more affordable. But the flip side of that is as interest rates come down, more people will come to the market to try to buy, making the housing market even more competitive because the rates are lower. So because the rates are lower, that may actually cause prices to go up because there's more competition. Now, the market right now may experience small price drops or maintain stability. But if interest rates come down and no more inventory hits the market, we could see prices go up even higher. So that stability on the market or even a slight decline in pricing, you can throw that out the window if mortgage rates come down and there's not much more inventory to hit the market. Now, a positive thing that many people don't think about as mortgage rates come down is that homeowners who felt trapped in their home or feel like they could not move because they had such a low interest rate, they might be more apt to move because the spread or difference between their current mortgage and the one they're going to get will not be such a chasm between the two. You see, it's very hard to go from a 4% mortgage to a 7% mortgage. But if you have a 4% mortgage and you go to a 5.5% mortgage, that's more doable and easier to swallow when it comes to your budget. So if mortgage rates come down, that may bring more inventory to the market, but they will also be competing for properties as well to buy. Now, the high interest rates we've been seeing has stabilized the market and even depressed the market in the sense that there's over 17% less home sales happening right now than this time last year. Now, if I was a prospective home buyer right now and I did not have any urgency to buy right now or during the summer, I believe I would hold off. Now, not many realtors would tell you that, but I believe I would hold off because I believe interest rates will come down. They're not going to be in the 3s, 4s, but I believe they're going to be in the high 5s, if not low 6s. So use this time to bolster your income, reduce your debt, and watch the market stabilize. So you can get a keen perception and know if something comes on the market, you know for a fact if it's a good deal or not. A lot of times people go into the market looking at a home and they jump at the first thing they see, wondering if it's a good deal, but they haven't studied the market good enough or well enough to know, hey, I need to jump on this ASAP. I want you to be a master at your market, not the national market. Your market is where you're looking at buying a home. It's nice to know these national numbers, but what's even better to know is what's happening in the area or community that you desire to buy in. Because you need to know the housing inventory in that area. You need to know if there's any new construction in that area. And if that new construction is causing prices to go down or causing it to go up. And you need to know what incentives that new home builder is providing. You also need to consider the influx of people into that area. If that area is in high demand, it may not be beneficial for you to hold off and wait for interest rates to come down, because that just means when it comes down, there's going to be even more competition and pricing will go up and you'll end up with the same mortgage payment. It'll just be offset with a higher purchase price and lower interest rate. Now, one thing we have seen in the past few months is that buyers have adjusted. Buyers have adjusted to the what can be considered high interest rates compared to last year, because they're more than double than they were in the beginning of 2022. They've adjusted. Before, people balked at the 6% interest rate. I had a closing today and the interest rate was just about 6%. So they've come to that realization that's just where pricing is right now. And if you can afford it, if it fits well within your budget, I say you have to do what's best for you and your family moving forward. Ultimately, I believe the Federal Reserve's pause is a good thing. I did not think they needed to continue raising rates because damage was being done to our economy, so we need to take a break and see what exactly is happening. They're just at depressed levels, and you have to consider, last year was at an insane pace. So just because things were going at 100 miles per hour last year, anything less than 80 seems like we're going at a snail's pace. We're still on pace to do 4.2 million transactions in existing homes this year. And new home builders are absolutely crushing it right now because they're able to offer incentives and rate buy downs that existing homes don't typically do. Now, if you're wondering what incentives and rate buy downs are, please watch this video next. And remember to like this video and subscribe to the channel and hit that bell icon so you can be notified for future videos. I'm Sir Ashley. Talk soon.